today's general agenda, we'll have Nathan with his topic of career and finance, then we'll get hit with the sweet spot, and then kind of some final updates and announcements we have coming up. First, I do want to ask, any outperforming moments from our members right now? Y'all did good on your midterm. You think you did pretty good on your midterm? You haven't gotten the grade yet, but you think you did pretty good? Anyone? I know I guess it started off, I had my math foundations test come back to me and I scored a 95. So I was like pretty happy about that, especially with, doing the math and stuff. I haven't done math in 2 years, like doing algebra stuff. Any outperforming moments? Quick from the audience before? Yes.
I got a 98 on Sweets essay.
98 on Sweets essay, awesome, nice. Anybody else did pretty good on an exam or anything? Now we'll go ahead and move right along. All right, that's good. So I'm hoping y'all did really good on your midterms. And with the quote of the day, we'll have a budget tells us what we can't afford, but it doesn't keep us from buying it. By William Feather. I feel attacked. Awesome. Now we'll move on to careers and finance with Nathan.
Okay, so really quick, before we begin anything, is anyone here not a business major? Just kind of coming for fun. You're not a business major. What major are you? What are you? Econ? That's what that counts. Econ? Okay. For those of you that are in business, I'm gonna kind of try to make this interactive, so I'll walk to y'all. What career path do you want to go to? So if I go to you, like a lot of business is networking, public speaking, confidence. We're gonna have to get used to this at some point. So if anyone wants to say their name, what's their major, and what career path they want to get into their path.
My name is Sebastian. I'm a finance major. One of the career paths I want to go into is I'm getting into commercial banking, investment banking.
I can say 2 more people.
Hello, my name is Andrew Valdez, and I would like to go into asset and wealth management.
One more person. Anyone want to volunteer?
Oh, fourth.
Maybe
Okay, well, I'll do it. I'm Nathan, I'm a finance major, and I actually want to do something with law. So I want to go down the corporate finance track, pick those 11 tiers, and then do corporate law, maybe at UTSA, something like that. One more person. Anybody.
My name is Wyatt Harrow. I'm a real estate finance and development major, and I'm not sure what things I can do yet.
So we're just gonna try to I'm just trying to ask the question at the beginning, just to make it a little more interactive. A lot of the careers that we're gonna go over in a lot of industry, no matter where you end up, you're gonna have to be able to talk to them. You're gonna have to talk to somebody for an interview, for your boss, just talking to other peers. You're gonna have to talk. Really quick, so I'm just gonna ask the general question: what careers come to mind when you hear finance? So Sebastian, you can go ahead and set that up. There's one answer that usually pops up quite a bit, so we'll try to gauge where y'all think we're all at. But just what careers come to mind when you think of finance? Yeah, make sure you skip. You don't have to make an account.
You don't have to make an account. Just be sure, let me know when you guys are all in. If I can get, I don't know, confirmation, raise your hands, however much. Oh, whatever. And here we go. Everyone get the QR code, okay?
Yes.
Okay, I think it's plenty of people. Investment banking, those two words usually pop up quite a bit. Pretty much whenever you ask somebody, like if you go on the street and you ask somebody, what do you think finance is? What do you think banking is? 9 times out of 10, they're going to tell you investment banking. Some of these are pretty good actually. Well, fixed income, equity, analyst. I think that's pretty good though. That's a pretty good, pretty diverse set of answers. So we can go ahead and move on. So just quick content overview. Balancing financial life and personal life. The different kinds of office, there's front, middle, and back. There's different positions within each of these. Buy side versus sell side. What does that actually mean? Types of banking, resources. So giving y'all a little bit of insight into what we look at. So different websites, different articles that we think would be helpful in terms of landing an interview, getting internship tips, and just all around market updates through these resources. So first, financial roles. Work ethic. You have to have really high work ethic to be in these roles. And it's not just a place where you can make money doing absolutely. You need to know what you're doing. You need to have the passion and drive to want to do these kinds of things. There's plenty of roles where you can just take a salary, go really quick hours, make some money. That's not what finance is. That's not what you should be aiming to do with this career path. Like it says, every career has a balance between the amount of pay you take, how many hours you work, upward mobility and extra opportunities, and client interaction. If your goal is to just work like constantly through your life and never moving up, that's cool. But for a lot of people, especially in the finance industry, it can be a little hard, it can be a little bit harder to move up depending on how many hours you put in, where you start off, and really how you interact with your peers overall. Because your managers in finance especially do take a really deep look into every single employee they have. And then pay. So everyone hears investment banking, everyone hears finance, everyone thinks of it as a super, super high paying job. But it's not even on the top 10 list according to US News. So you have a lot of doctoral things. The first, fun fact, the first business related job on US News is actually a marketing analyst. It's not even anything technically like finance related. So it's marketing analyst followed by financial analyst. So it's not super, super high paying like these are, but as we'll see later, you can make quite a bit of money in finance. So that was just a quick overview. Now we're getting into the good part. So back, middle, and front office. So back office financial jobs. Each of the 3 slides is going to look exactly like this, but with different information. That's just to keep it a little bit more consistent and to keep the layout the same. So these are not all the jobs you can have, but there are some possible jobs in back office. So starting with compliance, and each of the salaries is national. I had them at Texas at first, but I thought we should give you a broader outlook because you can really end up anywhere. So compliance, HR, IT, and accounting. The salaries do seem a little bit low, but you'll see them progressively increase as we go to middle and front office. So these are the kind of things where it's typical 9 to 5. You really just get to go home when you're done with work. There's not a lot of overtime that goes into it unless something pretty drastic happens. And the pay is the lowest out of front, middle, and back. So you start nationally at about 68,000. I just kind of took the average out of those. And you do get about a 5 to 10% bonus at the end of the year. As you'll see later on, the higher up in the ranking you go, you get a way higher bonus. And then prestige. If you care about how people perceive you, how you want to be looked at by other people in the company, the prestige of back office is typically not associated with anything crazy high. A lot of times, even I did a back office internship this past summer, and a lot of times people were like, hey, can you fix my computer? Like people just don't think of you as this highly respected person all the time. Especially in more competitive environments. If you're in a super competitive banking industry, a lot of people will be like, hey, fix my computer, put these numbers in, and they don't really treat you with that same respect. So if you want one of these jobs, accounting, obviously there's a lot of big 4 firms, that's different. People there, that's all they do is accounting. So they respect each other as accountants. When it comes to the general overall like rigor of these jobs, it might not be considered the most prestigious. So if that's something you care about, then maybe one of the next roles will be better suited for you. So now we have middle office. A lot of people don't actually know what middle office does. And depending on the firm, it can be moved around into front and back office. So something like a quantitative analysis, that can be moved to back office, that can be moved to front office. You see the pay is really crazy for quant. That's because what they do is a lot of math, a lot of really high level things. So obviously the pay is gonna be a lot more, and that's why on the pay side, I included it with and without quant. Quant bumps it up about an extra 15,000. So if you want to go into quant, one of our MDs, Colin, I don't think he's here tonight, but he is in quant. So if you want to contact him, he's on our Instagram, I believe, under the officer thing, and you can find him on LinkedIn. He is really, really knowledgeable about quant. But possible jobs, risk management, treasury, and credit. So each of these is more middle office, like it says. They don't necessarily deal with clients all the time, but they're not behind the wall all the time either. They're in the middle ground. They support both the back office and the front office. It's kind of thinking of like a chain. You have the IT people who support the structure and the framework for the entire firm. You have middle office who support the front office, and front office deals with the clients directly. So hours can be a little bit more taxing than back office. You do have to put in a little bit more work. Average jobs of these that I found was about a 12-hour shift compared to an 8-hour day from the back office. And that's just because there's a little bit more that goes into it. If you're IT, you know, you just go home, you repair the stuff that needs to be fixed, you go home. But with these jobs, you do have to stay a little bit longer. It might require a little overtime, working at home, doing some more research. So that's why these hours vary a little bit more. And the prestige is a lot higher than back office. The jump in prestige from back to middle is a lot higher than you would think. Middle office allows you that ground. It gives you a little bit more of a foothold to get into the front office, and also gives you a better pathway into networking. Being in the middle office, you can network with the front office much easier than if you were the back office. Middle office does work with the front office quite a bit, so that little crossover brings out a lot of resources as well. And you do get a little bit higher bonus than if you were in the front office or back office. Front office, the one everybody cares about, the one everyone talks about the most. You have investment banking, you have sales and trade, and equity research. Each of these, sales and trade a little bit lower, but as you can see, it's about $100,000 salary starting, not including a bonus, not including a signing bonus. So signing bonus for these kinds of things, I know I looked around, JP Morgan has about a $10,000 signing bonus. So just for signing and agreeing to go work for them, 10 grand. Then you get $100,000 yearly starting annual salary. And your bonus can be anywhere from 80% to 100% of your base salary. So you can easily be making anywhere upwards of 200,000 just right away. Prestige, really, really prestigious. If you can get into a front office internship, job, anything, especially right out of college, you're pretty set for life. Because the name associated with the banks that offer these positions is really, really high. And the hours, of course, are very high as well. If you want to make this kind of money, like we talked about in the beginning, it's very dedicated. You have to put all your time and effort into this job because you have to prove not only to yourself that you can do it, but you have to prove to all your bosses, managers, and the firm as a whole. Some people can stand out and climb really quickly, but if you get into one of these roles and you just do the minimum of this kind of role, then it's not going to look good and you won't be able to climb as quick. So these are some facts to consider. So these are all the things associated with back, middle, and front. A lot of it might seem negative, but it does not mean that it's the end of the world. And we'll get to that in a bit. Recruiting. If you're in the back office or middle office, it won't be as easy to be recruited or seen as if you were in the front office. That's because, like we said, they're more client-facing roles. So front office have more opportunities to work with management, more opportunities to work with clients. Where the back office is kind of more on the technical side and more of the support. So if you're in a support role, you don't really get to expose yourself to the clients. You can't really prove to yourself, prove to the higher ups that you are maybe as qualified as you actually are for these roles. The pay, like we talked about, like it shows, middle office, back office doesn't get as big of a bonus. The pay is a little bit less, but it does offer that trade-off of comfortability. So if you want to go show up for your job and still make a decent amount of money, middle office is that perfect pocket. You can go home, work a pretty decent hour shift, but you can still come home and relax. There isn't much overtime associated with that role. You still get to spend time with your family if that's something important to you. That's a non-financial goal. And if you do end up at a big firm in a back office or middle office, that name alone carries that weight. So sometimes there's a bit of a trade-off between position and name and pay. It's something that you have to consider. Where are you at in your career path? Where are you at in your life? Skill set, back office work is a lot of data entry. If you don't like data entry, don't aim for the back office. A lot of the back office stuff is spreadsheets, Excel, a lot of data entry, and each firm is going to be different. But for the most part, back office is heavy on numbers, and it's not high-level math numbers. It's just filling out a spreadsheet, filling out a form day after day, constantly. And that's the next point, automation risk. Every time you hear, oh, AI is going to take over your job. Most people don't believe that yet. Maybe we're not there yet. But with these repetitive data entry, that's kind of a risk you're running into. Computers and scripts can run these things, feed the information to a computer, it can spit out a report for you. So back office jobs are more at risk than front office because a computer can't talk to a client. It can, but it's not the same as a person-to-person interaction. A firm would much rather have a high-up associate or high-up partner talk to a client than a computer. Location. So if you're really big on networking, middle office and back office are tended to be located not in the major cities. They'll be located in cities they'll be located outside the city. So if you wanted to work in Houston, that's a major financial hub. Middle office and back office will be right on the outskirts of Houston, whereas the big firms in front office positions are going to be located directly in the heart of these cities. Like we talked about respect and prestige, like I said, people can see the middle office and back office as just, hey, you're here to help me, I don't care about you. That depends on the competitiveness of the firm. It's not what you should be worried about going into it. And if they do treat you like that, you get to decide, do I like this work culture? Do I not? That's a decision that you're allowed to make. And then, like I said, the positives. So you do have more free time with the middle and back office. And like I said, the name of the firm that you work at has the potential to carry that weight. Moving into buy side versus sell side. It's a distinction that's moving away a little bit, but it is still important to note what the difference is. So a buy side firm will buy and invest, like it says, large portions of securities for the purpose of money or fund management. Whereas a sell side focuses on the creation, promotion, and selling of those securities. So the buy side, you're buying these things, the sell side, you're trying to market it to a different group. You can kind of see the flow chart that the firms that sell to between financial products and buy side firms go to client commission, whereas the buy side is more long-term investments. Most of the stuff that we're going to get as students, as undergrads, as grad students, as postgraduate is going to be on the sell side. You have to be really, really experienced to work in the buy side. That's just because of how intense the work can be, how intense the information, the knowledge they need to have going into that. Whereas the sell side, like financial analysts at JP Morgan, Goldman Sachs, those kinds of things, those are all on the sell side of it. And majority of those firms are considered sell side. They have buy side divisions, but people like us, we're not at that level yet. We wouldn't be able to get into those positions. And like it says, investment banking, sales, trading, equity research, those are the kinds of things you see on internships. Whereas you don't really see, hey, I'm going to go intern for a hedge fund. That's not as popular. That's not as common because a hedge fund requires a lot of work. You have to be pretty smart. You have to be knowledgeable, experienced, etc. Moving into types of banking. So this is just a rundown of kind of what each section of banking does. So what is investment banking? Everybody talks about it. Everyone wants to be in it. You make a lot of money, a lot of hours, but what is it? So you're bringing together people who have money and who need money. You're taking the responsibility of managing somebody's money, maybe that a firm person, and those people want more money. So it's a shared responsibility. They're trusting you and you have to trust them. How do investment bankers individually do it? They have to advise companies on the best method of raising capital to support its ongoing projects. A bank doesn't work if there's no money involved. People need money, people want money, and a bank needs a ton of money to be able to function. Banks like JP Morgan, Goldman Sachs, they need a ridiculous amount of capital, and they do that by investing, making money. That's a subset, but that's a very big subset. They're good at what they do. Some qualities that you need to have: number crunching, verbal, written communication skills, ability to work long hours, and confidence. So if you don't have the ability to present yourself, present the information, to sell yourself, it's hard to break through these fields, because if you want to escalate, if you want that upward mobility, you have to be able to talk. You have to be able to pitch. Why are you better than the person next to you? Why are you selling a stock that's better than the person next to you? Why are you better than someone down the street? It's all about selling yourself. These are just some of the products of IB, investment banking, meaning what does investment banking entail? So things like mergers and acquisitions, equity capital markets, debt capital markets, leveraged finance, and restructuring. A lot of big words, but they can be broken down into these sectors. So investment banking can be broken down into, I don't know how many sectors that is, but it's quite a bit. Basically, they can work in any of these firms. Anything that you can think of that's a massive financial hub applies to investment banking. Literally every industry has a way to invest in it. I get some firms are private, but for the most part, if you can think of a firm, it's more than likely going to be on this list of sectors. Asset versus wealth management. So sounds similar. They both have the word management, but there is a distinct difference between the two. Asset management is more trading and investment in one industry for both individual and institutional clients, such as a person or major bank. Whereas wealth management helps the individual manage their investments and financial planning. So assets is good to think about as the physical, tangible stocks, securities, things that you can purchase, and that's what an asset manager does. A wealth manager is going to work one-on-one with you. What do you have in your portfolio? What do you want to do with that portfolio? How can you help it grow, diversify, things like that. Really good wealth managers have a list of clients. They have a book of clients that repeatedly come to them, they get referred, and that's how really good wealth managers make a lot of money. They have high-end clients that want to make more money, and they just want to repeat that cycle. So they go to a trusted wealth manager and go from there. Most people don't think about wealth management, or most people that do are kind of scared to go into it because you are being trusted with somebody else's money. But if you get good enough at it, it's a very high-paying job.
So, I think all this.
Yeah, these would be considered front office because you're working with a client. Whether you start your own firm, whether you're working for a firm as a manager, you still have to work with the client as well.
Like classified sell side.
This would be more sell side because you're trying to pitch to them as a portfolio, like this might be a better course for you. The distinction kind of grays because you're trying to pitch what they should buy along with what they're available to buy. So they have resources that they have limitations, whereas if you're with a big firm, they can kind of just do whatever they want within their budget. Whereas a person, an individual like yourself, might have a much smaller budget compared to a large firm. So asset management would be more, it's good to think about asset management as a firm type of role, whereas the asset managers are taking the assets that each firm will have an agenda of, we want to make X amount of profit, right? So these asset managers see which assets can be used to get into that market to meet our quotas. Wealth management still has quotas. They need to make money. They need to make the same amount of money relative to the firm, but they're working with people. They're working with the individuals. So when the asset managers do their thing, it's very much on the market. When wealth managers do their thing, it's I have this amount of money to work with from the person, and they do it with a group of people. Does that kind of?
Before asset, is like this firm like getting this from you.
Oh, so asset is the firm, that'd be their capital, their money, and then wealth management is people's. Do you have a question? Okay. So characteristics, again, you have to be a people person to be on the wealth management side, really good communication skills and a really strong interest in the market. If you have good communication skills, you're a people person, don't care about the market, that role's not for you. Someone is trusting you with their money to invest it and make them and you money. So if you don't care about the market, one of the other roles might be better. That's not wealth management. And then asset management, a lot of attention to detail and a strong interest in the market again. You have to have attention to detail because you have to watch how the market moves. If you want to make money based on pure assets and not worrying about someone else's portfolio and just the firms, you have to be able to you have to be able to watch the market. Some other different pathways you can go, sales and trading. A lot of people think of Wall Street when they think of sales and trading. Basically, they help investors make investments in the public market. So S&P, NASDAQ, things like that, those are where the sales and trading takes place a lot of the time. Other things like commodities, alternatives, real estate, also as well. Sales and trading has an extremely high volume of trading because it's more specialized in the industry products. So there's different sectors in the S&P, there's different pockets in the NASDAQ, different pockets in all different indexes. So people can specialize in really any of these. A lot of us, we invest in mutual funds, we invest in different things, but we don't have the same nuance and the same complexity to understand these kinds of levels of trading. So that's what these people do. And they also sell products to outside investors to allocate risk and generate a profit on securities. So you're not just blindly buying and selling. Like we talk about every presentation, it's not gambling. You have to have some sort of basis, you have to have some sort of education, some sort of way to gauge what are you investing in, why, and what is your expected return. Then equity and research are really not thought about one, but it's the one nonetheless that is very important. These are the people that generate research reports on publicly traded companies that are resold to buy-side investments. So the people that are trying to buy securities, purely buy them, that's a lot of what this side is. And these are the people that meet with the high-ups. They meet with the CEOs, they meet with the CFOs, they deliver these financial reports, and they try to gain insight into company matters. Again, you need to have strong communication skills, especially if you're writing reports. especially if you're talking to the CEO of a company. Imagine you trying to walk in, talk to the CEO of JP Morgan. You better know what you're talking about. You better know what you're talking about. You better have the research to back it up. You better understand what you're talking about. And then transaction services. So this one kind of gets looked over, but these are the people that make a lot of stuff possible. So if you're not interested in super front office, but you still want to do mergers and acquisitions, it's a really good pathway because you get to observe every single transaction that goes on. You get to see what kind of acquisitions happen. You get to see what kind of mergers happen, but you don't have to necessarily be worried about purely investing. A lot of it is due diligence. So these people cross-check everything. They check documents, paperwork, all these kinds of things that would go unchecked by a majority of other sectors. They do help both clients and the investment banks, and you can get a position as both a junior and higher. A lot of these are found at the big four accounting firms, such as KPMG, EY, those kind of things, and they do have a little bit additional hours in the work week. So now resources. This is stuff that I think you all should be really excited about. A lot of this will help you learn about different websites, different articles, different ways to market yourself, different ways to get an interview. So if you care about traditional news, Wall Street Journal, New York Times, perfect ways to get daily news. Some of these have a student discount on them. I know Wall Street Journal has a student discount. Bloomberg, we have the Bloomberg terminals down there. You can also get a student discount, I believe, on a subscription to Bloomberg and CNBC. Different newsletters to sign up for. So Seeking Alpha, Wall Street Breakfast, Axios, Wall Street Journal again, New York Times. All these are really great. And then Wall Street Oasis has really great interview tips. If you're worried about a big interview coming up, if you're worried about maybe a mock interview that you want to go over some skills, some more qualities, these are perfect. And now I'll have my associates present some current events.
I don't want to interrupt you that applause. Thank you, Nathan, for that wonderful presentation. Okay, today we're going to be talking about, we're a little late to the scene. All right, I'll admit that. But we're going to be going over briefly the Capital One acquisition of Discover. So this is a $35 billion deal. It's a lot of money. So I want to make this a little bit more engaging. Why are you doing this? If no one's going to volunteer, I'm going to end this. You know, I think it's production. Or in the probably do it so big company. Excellent. So the simplest answer to this would be to increase their market share. Now, what are they betting on when they do this? What trends and sort of, what are they betting on? Anyone want to answer that? Well, I mean, from what I know, the number one starter, they target more. I don't know if it's surprising, but they kind of have the same target market. So they're just acquiring a company that has pricing target market and they're creating share. That's why I think it's a good idea more of the market share. Very good answer. I was thinking more so market trends other than I'm trying to eliminate the gap between the stage and the people. So I know you know the first, I'm going to do the opportunity. What are they betting on in terms of market trends with this acquisition? Credit soon. That's exactly what I was here. Yeah, so Capital One is betting on increased consumer spending, increased consumer spending, increased consumer debt. People are taking on more credit cards that they're taking on. They just don't care anymore, is what these financials are saying. So, how is the competition reacting to this? I have a really good video I want to pull up for this. I think it's a great way to not just see the financial industry, like who's at the top and how do they think, but it's also just entertaining to see the CEO speak on the matter.
We think a major deal with Capital One, it's deal to acquire Discover, the potential there is to reshape the credit card industry. The combination would create the largest card issuer in the US, surpassing JP Morgan Chase. That is next for now. So if it's really approved, does it create more competition for you?
I think companies should go out and do and innovate and grow and merge and try to challenge it. I think that's good. So I think it's a mistake that like you said, it's the competition. In fact, some of the, I think they show out to these small banks, but that's how they think they're going to do change more. He said nothing. And they're not looking at the case. So they should predetermine that. And so the market predetermine that. In this particular thing, from the credit card business, which is the bigger, more scale, they're very good at it. I mean, the one respect, versus Fairbanks and Capital One. And then there's the networks. There's a debit network and a credit network. The debit network, they have an unfair advantage of that. Of course, I have a problem with that. You know, like, why should they be allowed to price debit, they can reprice debit just because of a loaner is bad? I don't know what the plans are really. You know, I guess that's a lot of, whatever the city does, a lot of times they do, and they actually create another credit, card network, I don't know. But, you know, let them compete, let them try, if you can get unfair, we'll complain about that, but I'm not worried about it really, like I said, we'll do what's attractive.
All right, well, as you can see, egos in finance are not a scary thing. Jamie Dimon is very welcoming of this competition, and I think it's just interesting to see how people near the top think about things like big deals like this. He's just sort of promoting the competition. All right, well, that's all I have for y'all today. I hope y'all enjoyed. I know. So everybody, welcome back. I'll move this.
We face a major field of capital.
There we go. Okay. Sorry, that's loud. So anybody know what happened with NVIDIA last week? Anybody hear the quarterly Q4 earnings with NVIDIA? Anyone want to tell me what occurred? Well, they had a record year, a record quarter where they essentially had a $22 billion increase in revenue for the quarter. Now, that's basically a 22% increase from the previous quarter. And in one quarter, you know, one quarter is basically 4 months. So in 4 months, they basically increased their revenue by $1 billion. That's a lot. And in 4 months, obviously. So, but I just wanted to emphasize that. So the previous quarter, they actually had a 265% growth from the same period in year ago. So Q4 last year, it basically 2.5 times more than last year's Q4, which is basically a year ago. That's a lot. I mean, so it's basically the earnings per share got diluted a bit, but it's now up $4.93. It's up $4.93, up $4.93, or 33%. And it's so it's just highlighting really now where NVIDIA stands in the market. As you all know, AI has had a huge change in that. NVIDIA has taken a kind of leading role in the market in terms of developing the semiconductors and chips that are used in powering these AI devices. So you have a lot of investors now who are literally bigger than when it comes to NVIDIA. And so they actually surpassed $2 trillion in market cap. And actually, I just looked at it a few moments ago. It's actually down below 2 trillion, probably 1.94 trillion. But you know, a week ago they actually surpassed that, and they have surpassed Amazon, Google, Netflix. So those are companies that they have surpassed them. It's a big deal because it shows essentially where investors are prioritizing their. And they see a lot of opportunity when it comes to, you know, the whole AI race that's going on right now. Especially world, these new developing technologies are really going to be enhanced the way we do things, the way we work. Everybody is now, everyone in our creature uses ChatGPT. And so this is just, yeah, it's a pretty big deal. But we haven't seen a company that high on the ladder in terms of market cap grow at that rate. So it's pretty unusual. If you actually look at the graphs here, the data center, it basically rose 409% from, I believe that is two. And so what you see here is essentially it was at 3.6 billion where it started in 2024, and it slowly rose basically in a year 20%. It's now worth 18.4 billion. The data center, that's essentially where they do all their R&D when it comes to producing semiconductors and microchips for AI. They are supposed to be powering these new AI software. So that's all I would have for me. Just thought that would be interesting. It's a pretty big deal. Moving on. Thank you, guys.
Okay, so to end off this presentation before we get into the sweet spot, we have a quick quiz for the presentation. Some of them are finance related, some of them are a little off the top topics. But if y'all could, it's only 6 questions, so pretty quick quiz. That's loud. But if you want to join, we are going to do another small gift card prize. So when you come down, we'll send it in an email to you. We'll get it to you. Go ahead and join, and we'll get started once everyone's in. What? Oh, sorry.
Don't worry, guys.
Oh yeah, we can't win without it. We all know. A few more seconds and then we'll get started. Go ahead and get started. Okay, first question, what is the highest paid job according to US News? So, anesthesiologist, oral surgeon, psychiatrist, or lawyer? What do y'all think? There's 2 right answers, but we'll see. Seb, Cameron, Darren, Janet, Mark. All right, next question. What are possible roles for a back office job? Accounting, treasury, risk management, or HR? There are 2 incorrect answers, just the first 2 questions, but only gonna be 1 moving on. Okay, still pretty good, still pretty good. All right, Mark, Dante, Cameron, Miguel, Chris. Question 3. Which of these includes hedge funds, venture capital, and mutual funds? Sell side or buy side? I better all get this right. It's a buy side. All right, Jada, you can't win. Jada, Seb, Darren, you can't win either. Oh, okay. All right, question 4. Who is the CEO of JP Morgan? Jamie Dimon, Messi, Charles, Sharp, and Ted Pitt. That's only 1 right answer, so this is not Messi. Yes, as in Luke's video, it is Jamie Dimon. Okay, Judy, you gotta stop playing. Okay, 5 out of 6. What is the primary role of an investment banker? structuring corporate financing deals, facilitating mergers and acquisitions, managing supply chain logistics, or developing market strategies. A little bit tougher question. So it says primary role, facilitating mergers and acquisitions. Oh, okay, well, that moves on pretty fast. I'm gonna talk about it, that's okay. All right, Darren, who's Darren? Who's winning right now? Okay. I see your listed competition. Last question, chance to take the lead. What is a primary function of a professional working in the middle office of a financial institution? Managing financial data and analytics, providing customer support for account-related inquiries, designing marketing campaigns for financial products, or executing stock trades on behalf of clients. It is managing financial data and analytics. So, who won? Mark was third, Darren second. Seb, who's Seb?
There.
Okay, Darren, we go to Darren. Darren, you win. Yeah, come down after the meeting and we'll get it to you. Thank you all for playing. We will go back to the slides. There we go. All right, thank you all. That's my presentation. I'm gonna hand it over to Professor Speedy.
All right, so, first, I got to mention Costa Rica. We're trying to finalize it. 20 people signed up a few weeks ago, interested, 5 of them responded to me. So we have room for 1 or 2 or 3 more. So if you're interested, email me as soon as possible because we have to decide really fast. We have enough Spanish speakers that are probably okay in Spanish, but Spanish does help. We need a few more females to go that would help arranging the rooms. We're going to try it on a new place. We're going to stay this time, which is incredible. One of our micro-lending partners started essentially an Airbnb, and we're only going to stay there. It's an incredible place. But email me. You can email ronald.sweet@utsa.edu, and we'll finalize it pretty quick. Should be a really great trip. All right, so what I wanted to do, and I don't see, is my file loading?
Yeah, it's in the slides.
It's in where?
In the slides.
Oh, is it?
Yeah.
Okay, so I want to do one more time on this idea of a dashboard. I'm really excited about this. I think this could really be huge. So we were looking at the competition. Nathan showed some of those sources that you have for education. What we want to do is create a new product, which is a 1-page, real quick, tells you what's going on in markets, that you can read it in less than a minute. So if you're going into an interview, you know what's going on. We didn't put Discover card up there, but we did put NVIDIA. We talked about Discover going in there. So next week, we're going to do our first published one. We were going to think about doing it this week, but I was double booked. I had to do an interview while we're working on it, so it's kind of confusing and mayhem, which is good. That's what finance is all about. So we want people to go to either to our blog or to our podcast or to our YouTube channel or TikTok channel. I've never done a TikTok. We might do on X. We're going to find out. So this next week, it'll probably be a blog and a podcast. And then after that, we'll see how we go. We want to push it pretty far out there, see how many people can get on this. When we're looking at the competition, we think the problem with the competition is it's too much. You're walking into an interview, you don't want to know the 50 things that happen. You don't want to get right to it. We also want to prepare you with the things you can say as you're walking into the interview, because the most important thing they're looking for is that you're really into finance. You go into an interview and say, hey, man, you see that Discover deal? Well, that was pretty interesting. Or you see what the Fed was doing? Or you see what the 10-year treasury reacted to the Fed? Or you see what NVIDIA announced this week? Those kind of things. So you can preempt whoever's interviewing you. If they're HR, anything you say is going to sound great because that's not their field. But if it's finance, you want to bring up something that you know they're thinking about and preempt them. And versus them trying to figure out if you're interested in finance, you're just like, you're so into it. You make it just sound like a normal conversation. And that's what we're looking for here. Just to give you some examples on the economic news, not much happened last week. So we're in this thing where everybody's talking about inflation. So we had the CPI come out few weeks ago, markets sold off, but they've since come back and hit new records. The next big news will probably be the jobs report next week. We'll see. That could be really, really interesting. We get GDP numbers next week. Will we add that? It kind of depends on what they are. GDP numbers is really old news, so markets don't usually react to it. But we're in a political year, so it gets more sway, so we'll see. But we get the ISM, we got that on Friday. Jobs report on the 8th is going to be a big one. So what we're trying to do is say, you don't want to walk into an interview and the jobs report came out the Friday before, you don't know anything about it. Or the Fed did something and you don't know anything about it. So where's the Fed funds rate right now? 6%, 5.25%, 4%. So you'd want to know that, right? So, and then what's going on in the US markets? So right now it's still the story of large cap growth. They're dominating. Very frustrating because this story's been on for years. Large companies are up 27%, growth stocks are up 42%. You want to know that going on. This is a NVDA Meta stock rally. It's been a pretty narrow stock market rally too. It's been dominated by a few names, but most of the market's been pretty boring. Small cap had a 2-week outperformance. I was so excited. And then last week they fell off. So 2 weeks, maybe they'll come back. What I've been amazed with the small cap, and what we're talking about is how far off the large cap and small cap have been. I wanted to go back historically and see if we've seen a period of time where those are like two different markets, because they've been highly correlated in the past. I've been just shocked where the US, the large caps up 1%, small caps down 2%. I can't remember a time when the two markets have been so wildly different. But not getting that. World markets, Japan, you want to know, you guys probably don't care, but my generation, the fact that Japan hit a record last week is huge. It's been 30-something years since they last hit a record, and they fell 80-something%. I'm now finally come back. It's huge, so I would want to know that. Obviously, the S&P hit a record. You'd want to know that. What's that magical number on the S&P? 5,000. That's a pretty important number. And they stay above that. Where do they close the day? Were they above 5 or below? You remember? Above how much? I mean, you have to go look and see. You want to know that. That's an easy one to remember. You don't know that it's whatever, 4 decimal places, but you want to know if it's above or below 5. Developed markets are just doing horrible. In the US is up 27%, developed markets are up less. In emerging, what's killing emerging markets? It's China. China's killing them. But what did China do this last 2 weeks? China's up 8% since early February. You'd want to know that. Talk about a huge advantage as a finance major. A finance major comes in, it's, oh, no, China's sold off. You come in and say, yes, China's really been selling off, but you know they're up 8% since the early February. There's something, is this a turnaround? That's a pretty strong rally, isn't it? 8%. You would know that, you'd have that to be able to bring up in an interview. Is Japan, what's going on in Japan? That's an interesting story. It's a really horrible economy, too much debt, horrible pension plans, not enough workers. Why is it doing so well? They have some really impressive firms. Is that, it's an interesting story. Is that going to continue? Is that one of the strongest markets last week? Bonds, not much to say there. A couple of basis points, but we still put it down so you know. But you'd want to know where the 10-year treasury is. Is it above 4.5 or below 4.5? You'd want to know that, right? If it went above 5, that'd be a big deal. If it drops below 4, that's a pretty big deal. I'd walk into the interview and say, man, 10 years back below 4% again. They would be impressed if you said something like that, but you got to know it, right? So how do you know it? You got to be involved in it. And then we put NVIDIA in here. So we talked about putting Discover. It was interesting. We looked at all 3,000 stocks in the Russell, and we looked at what moved the most. There was a stock, I forget what it was. It was down 90-something%, but it was, or was it up 200? I can't remember. It was like a $50 million stock. It's like, who cares? Like, it's a penny stock. Who cares if it's up 200%? It doesn't matter. So we're looking for the bigger names. So NVIDIA was the big name, obviously. Discover, not as big of a name. Y'all know which firm started Discover? So do y'all know, it's pretty amazing, Discover was Sears, y'all heard of Sears? Discover was Sears credit card. Allstate was Sears insurance company. Yeah, probably don't know, Sears spun off Discover card, spun off Allstate. And what's left of Sears, they bought Kmart, what's left of Sears and Kmart. But there's still that remnant, Discover is a remnant, Allstate, two pretty good companies, right, that are, so interesting news. So what's gonna be the news this next week? So on Monday at 3 o'clock, probably before 3 o'clock, we're gonna run in, we're gonna have this thing written in 10, 15 minutes. We're gonna put it out as a blog. And then hopefully we have some good microphones. We're recording this podcast. I don't know how to do a podcast. Anybody have experience doing podcasts? I don't know how to link a podcast to Twitter. I know how to do YouTube videos. I do far too many of them. I know how to do that, but I don't know if we get. So if you have ideas on this, we'll see. If we have too many people, we can break up into 6 different teams. And we're moving fast, so that's the goal. We're trying to get an audience, we're trying to get it larger. If we do a YouTube, we'll probably add graphics to it. So the blog versus the podcast is simply someone reading our blog on the podcast, so people can listen to it, they're exercising and driving in. So we'll see. I hope to get some traction. So I've got a lot of people I can push this through in industry that we can even probably get better input, some insights. We have one of our members is going to be on the trade desk at Victory Capital trade desk. They know everything, so we can get some more insights. So, any comments, questions on this?
Isn't Japan right now?
Yeah, and the market doesn't care. It's up. So,
When you were talking about how lower level market companies can like rise by 200% or something like that, is there like a trend? Not like a trend, or like what happens to those companies for it to increase?
well, if it's a penny stock, it almost doesn't matter. So you got a penny stock as a firm that's essentially insolvent, but they still have a stock. Like GM was like that. They have a stock, but it hasn't converted. It's going to go to zero. But there's a bunch of short sellers that they want to close their positions, and they have to buy it back, and it causes a 50-cent stock to go to $1.50. It's not really worth anything, but it's worthless because obviously the bondholders will say, well, we'll let the stockholders have a little bit. No, they're gonna take it all. So it's just that's a lot of it. Another one can be it's a firm that looks like it's gonna go insolvent, and they had some fix and they may make it. So maybe there's a 70% chance to go under, and that 30% happen. So they go from $1 to $3, or some buyout or something. You know, it can be. A lot of it's just pure gold. I don't do penny stocks at all because there's really nothing there. You're just hoping. It's like going to Vegas. You're just hoping maybe. So there's a 99% chance they're going under. Maybe something will work out. Probably not. So we ignore those. Why that one was in the Russell 3000, I don't know. It's usually those kind of stocks aren't in the Russell 3000. It could be some startup company that, if you know, there's a lot of biopharmaceutical firms that have zero revenue. And they're testing stuff, and if one of their invention works, they go, you know, suddenly out. So you hope you buy those stocks. I would never buy stock like that because they're too small. You know, I don't have a degree in science to be able to know if their product's gonna work, but that's the kind of stock you're looking for. But then 99% of them are gonna go under and not doing things. So. All right. I hope this works, y'all. I think this is pie in the sky. I think it can work. I want, maybe this isn't the right idea, but something related to this. I want something in the investment side to go viral where we create a following and we get our name out there. And if you want to be part of that, we can't have 50 people there on Monday, but we got a few in here that are in there. Just show up. If it's too many people, then we'll kind of do the rotation. And I will put your name on the byline. So if you show up, you can be on the byline. You can put that into the interview that you created a blog or a podcast. All right, that's it for me. But if you're interested in Costa Rica, make sure you let me know tonight. So, all right, thanks.
Awesome, guys. So I hope y'all like that presentation that we had, learning more on careers. Now I'm gonna go over some updates as well as things we have upcoming. First and foremost, this Friday, and that's a little abrupt, I'm gonna send it over to the Telegram as well. We can participate in SGA Field Day. I forgot exactly, our artists, do you know what games they're bringing, I know last year it was, we had like a little dodgeball during, it did not hurt. Also some, I think they had volleyball.
Tug of war.
Yeah, tug of war.
They might have up the course type thing.
Yeah, I know they had optional courses. Essentially, the small little games put together. I had a very enjoyable time last year. If y'all want to scan the QR code, we'll get your email, and then that will send out a form for you. I forget exactly what it's called. It's a waiver. There we go, a waiver. It will run from 1 p.m. to 5 p.m. But if you need to leave early, if you need to show up late, perfectly fine. We do need a minimum of 10 people though. And if you are a graduating senior, we want to kind of prepare y'all for the fall, the end of the year formal that we'll have for you, as well as giving out, prizes. If y'all are graduating seniors this semester, scan the QR code. There's some little questions there as well as to whether, you're available to get the stole from us as well. All good on the QR code? Awesome. Now, one more announcement as well. Our friends over at the Society of Economics are holding a Ruby Martinez. She came here last semester as well, presenting about the Federal Reserve. And she's coming back again. The presentation will hold on Monday, March 4th at 5:30 p.m. in the McKinley 2.01.36, kind of like a lecture hall similar to this style. Go show support, learn more about the Federal Reserve, and ask her some questions. And I will be posting this on the Telegram as well, kind of just keep y'all updated, as well as Instagram. All right, Market Watch updates, awesome. I don't believe we actually updated them, but if you're in the first top 10, congrats. You can still sign up as well to Market Watch, get really lucky and, hit that first top 3 spots. We are giving prizes at the formal for first, second, and third as well. Just keep that in mind. Selling t-shirts and polos as well, like always, guys. And apart from that, hope y'all have a wonderful week. We're here if y'all have any questions, as well as anything that you find interesting that you want to talk to us about. Hope y'all have a good day.